All right, we are live. Happy Sunday, ladies and gents. Beautiful sunny day this time. Not a cloud. Actually, I'm lying. There are clouds in the sky, but not that many. For those who aren't here, let me know if you can hear me. Just type a yes in the chat or thumbs up, all that good stuff. Let's let everyone know we're starting. Let's move that over there. For those who aren't here, type yes in the chat, thumbs up, all that good stuff if you can hear me. I did see some thumbs go up, so it looks like you guys can hear me. All right, we'll give it 4 more minutes and then we will officially start. How's everybody's weekend going? Sweet. All right, let's get rid of all of these channels. As we wait for people to come in and to start. Some pretty good setups this week, or for tomorrow anyway. Let me share my screen. Yeah, pretty good setups for tomorrow. For those who trade options, which is, I imagine, everybody in here, we have a good amount of 2-1 setups basically on everything. So definitely looking for a productive Monday tomorrow. And Mondays are usually good. Let's see what the market has in store for us. IWM, for those who trade that, and RTY for futures, has a Momo hammer setup, and I think gold as well. I could be. Does gold have a Momo hammer? Let's see. Yes, gold has a Momo hammer on the 4 hours. So if you trade gold, that setup is golden. No pun intended. That came out totally unplanned. For those who are just coming in, we're going to start in about 2 minutes. But yeah, tomorrow, definitely great setups. Definitely looking forward to tomorrow. Hey, Mooch, I am doing fantastic. Great, relaxing weekend. I almost had to do this class in my car because the power and the internet went out because it was like a little storm that happened like 2 hours ago and it knocked some stuff out. Thankfully, we're here. So, other than that, I'm doing great. How about you? Hey, Kev. All right, let's let this last group of people know. Start in a minute. Let's hide that one. Sweet. Glad to hear you're doing well. Where the heck is my channel? There we go. All right. Ah, thank you, Himothy. I was just about to say that. Yeah, Jamari. So, in the event that the power randomly goes out or that the internet goes out for whatever reason, let me actually make this backup right now. I'll make a Zoom call that we can all join if my power goes out because I have to just run to the car and just have the class from there if something happens. All right, let me have this running in the background. Where is the YouTube chat? All right, so that is going to be the Zoom link that we would use as a backup if my internet goes out and I have to go do this in my car because my hotspot for my phone isn't that powerful in my apartment. So if anything happens, that's our backup plan. Cool. All right, let's officially start. Welcome, everybody. My name is Advent, and I'm not a financial advisor. Anything that we go over in this class and all of my content is not financial advice. It is only to be used for educational purposes only. Trading does have its risks, so please do your research before you engage in trading. Today's topic, we're going to be going over the options Greeks and the options chain, and we'll talk about some things like IV crush and things like that, because I keep on seeing people get messed up when they trade earnings and they don't know why, even though their contract may be in the money. Hey, Balaji, my pleasure. Glad for you to be here. Also, as always, we are above 50%, so I won't hold you guys to that. But remember, all I ask for, since I have these free classes, just hit the like button and that's it. Hit the little thumbs up button on the video. If you're looking through this video through Discord, not directly on YouTube, you might not see the like button or the thumbs up button. So all I ask for is to like the video so the algorithm can see that people like this to get the video out there and we can help more people who may need to know this information. All right, so let's bring this up. Also, questions, you can ask questions during the class and I'll answer them. Let's just try to ask questions over what I'm going over specifically so we don't like bounce all over the place. And then after the presentation, we'll have I'll like open up the floor to like all the questions and stuff like that. All right, let's bring this up. There we go. All right. Let me bring up this PDF slide. Sweet. So I'm not going to go over the entire options course. I'm only going to go over the information that we're going over today. So we'll start. Let me zoom out of this because it's a little too big. All right. Can everybody see my screen? Cool. All right. So the options chain, for those who are new to options, is one of the most important things alongside the Greeks that you need to learn when it comes to trading options, because this is what options is based off of, basically the options chain. If you're just buying calls or puts blindly, you are gambling and you're going to have a real bad time. I'll tell you from experience. So, starting off, this specific screenshot I got from Webull. However, depending what platform you use, this can be very different for you. So, like if you use Thinkorswim, it's going to be where is this? If you're going to be using Thinkorswim, it's going to be a little different for you in the sense that trade. So Nvidia right here, there's the options chain for Thinkorswim. However, if you're using Webull, which is the screenshot, or Robinhood, or anything like that, it's going to look different. However, the terms are interchangeable, so we're all good in that front. So moving on, The options chain, I'll go step by step. And if you guys have any questions over the things that I talk about, just let me know in the chat so I can take a pause and then I'll go over it again. So the days until expiration, for those who don't know what that is, you might have heard the term like 0 DTE or 1 DTE or 7 DTE, things like that. When people say that, that just means that the contract that they're trading, that's that's how many days it has until expiration date. You'll usually see people talk about 0 DTE on Fridays because that's when well, pretty much almost all the option contracts expire, except indices that expire every day or every other day, depending which one you're trading. So essentially, when it comes to the days till expiration, that just means how much time you have until the contract just disappears, in the sense that, let's say if you got last Friday's contract and you didn't sell it and you still holding on to it, it's going to expire worthless if you're not in the money at 0. So whatever money you put in, gone. So generally, if I'm day trading, I'm only really going to be trading the same week expirations, meaning if it's Monday, like for tomorrow, if it's Monday, I'm going to be trading the contracts that are going to be expiring on Friday. Because I'm day trading and I don't really hold moves for more than an hour or two maximum, usually I'm like out of the trade by like 30 minutes to an hour. I don't necessarily care to get contracts that are like, 2, 3 weeks out because I'm going to be in and out in the day, right? Now, if I'm swing trading, that's different. If I'm swing trading, you don't want to get a same week expiration because you want to let the contract and the trade pan out, right? Especially if you're taking a trade off a higher time frame. Because if you're swing trading, but you only have 3 days until the contract expires, then you better hope that it moves in your favor in those 3 days, or that contract is toast. So, going to a more direct explanation, like I mentioned here, this is the time until the contract expires. If the contract is not, let's say if you're buying calls, that means that you make money when the stock price goes in your favor or up. Let's say if you chose a 155 strike, if the price of the stock is not above this price or at the break even price right here, you're going to lose value. You're going to lose more than you bought in. So it needs to at least be in the money, which is, above the price that you chose or below it if you're getting puts. And it has to, of course, hit the break even price at the expiration date for it to be worth something. If none of that is done, then the contract is going to be 0. Something to note, you don't need to hold the contract until it expires to make money, because the value of these contracts are changing pretty much every second of the day. If I buy it at, let's say, 200 now, in 10 minutes it might be $220. That doesn't mean that I need to wait until Friday to sell it. I can sell it the same day if I wanted to. Cool. So, and the strike price, like I just mentioned, the strike price, pretty straightforward. Strike price is essentially just the price that we think the stock is going to go to. So let's say if we think the stock is going to go, let's say the price of Apple is $150 and we think it might go above $150. So we might want to get the 155 strike or the 150 strike, whichever you prefer, if you want to do out the money or in the money contract, stuff like that. Just to be able to absorb most of the delta, which I'll go over in a bit when I go over the Greeks. So again, to keep it simple, strike price, it's the price that we are aiming for, or whatever it is in relation to your strategy. So if, let's say, your target is at 154 and the price is at 150, you can get the 155 strike because that's where price is heading. And you don't really want to go too far out the money, like $10 away, because the Greeks are going to be horrible, which we'll go over later on. So far, days to expiration and strike price making sense before I continue? Cool. All right. So the next portion for the break-even price, like I mentioned, the break-even price is the strike price plus the price you paid for the contract. So as we can see for this 155 call, let's say we got in the mid price at 305, and the mid price just means the middle price between the bid and the ask. So the bid here is 3.00 and the ask is 3.10, so the middle price is 3.05. So let's assume that we get the contract at 3.05. We're going to add that amount to the strike price, which gives us the break even of 158.05. So remember, your contract on the day of expiration has to be at this price right here or above to be worth more than what you paid for. It can be in the money, but it still might not be as much as you paid for it because, theta is eating away at the contract, which we'll go over in a little bit. Volume, pretty straightforward. The volume is it just lets us know how many contracts were traded that day. So in this case for Apple, 13,200 contracts were traded that day, at least at the time of this screenshot. And then the open interest is how many contracts are currently being held by people that haven't been sold yet. So this is how many contracts are owned at that very moment. For the call side, we have 8,002. For the put side, we have 13,552. Generally, you want to get contracts that have a lot of open interest because you want it to be liquid. You don't want to get a contract like I had this person say, "Hey, I'm trying to sell this contract, but the bid is like 10 and the ask is like 100." When I looked at the open interest, there were 5 contracts. When I looked at his position, it was 5 contracts. So it was literally just him who owned that contract for the strike price. So there was nobody to sell it to but himself. So you always want to make sure that you're getting really liquid contracts. Everything here in the chain section making sense before I continue? Any questions? Go for it. What's the question? How much open interest would you say is safe to get into a contract? That really depends on what you're trading. Let me bring up some examples. Give me one sec. So let's look at NVIDIA, for example. And again, it really varies depending what you're trading. As we can see here in NVIDIA for this week expiration, and I think earnings is this week. You guys can correct me if I'm wrong, but I think NVIDIA does have earnings this week. As we can see, the strike price for calls of 130 has 119,000 and change contracts. Me personally, I'm probably gonna like any of these here would be fine for me. Honestly, I wouldn't mind getting any of these. Anything above 1,000 to me is cool. But again, it depends what you're trading, right? Because if I go to Coca-Cola, Coca-Cola, the contracts that are like in the money or at the money have a lot higher open interest. So what I would do is just look at the average amount of contracts that are like open interest and then decide, what's a good amount, right? So if I'm looking at Coca-Cola, most of the out the money contracts, at least the ones that are further away from the current price of the stock, are averaging about 300 to 500 open interest, right? So, and then of course, the ones that are at the money or about to be in the money, or in the money rather, at the money and about to be the same thing. At the money or in the money contracts, we can see that it's above 1,000. So in this example, I can see that I can see that essentially a lot of, like, an average amount that I'll probably look for is anything above 500, to just keep it simple. Or if you look at SPY, you can see that SPY has a ton, like over, like the good ones or the specific ones, or not specific ones, but some of them. Let's actually go to tomorrow's expiration. Tomorrow's expiration looks like everything is above 1,000. Any of these are fine, except remember, you don't want to go too far out the money. Like these over here, I'm probably not even going to touch because the deltas are trash and the Greeks are trash. So I'll probably look for anything that's within $2 of the current stock price when it triggers me in. Let me know if that answered your question. I just joined the group and can't get access to anything except this. Zach, what group are you in? Are you in my group or another group that I support? So if you just joined the group, at least I'm assuming you mean my group. If you don't see no other channels, go to browse channels and make sure to enable all of the channels. All right, back to the schedule of the class. Witchblade, did that make sense about the open interest before I continue? And there's a slight delay as well from when I talk and you guys actually hear me. So if I don't say anything for a little bit, that's because you haven't gotten my message yet. It might be my connection today. Is anybody else having screen issues? Like with the stream buffering and stuff? Let me know in the chat. All right, moving on. So next, we're going to be going over the option Greeks. Alongside the chain, this is another very, very, very important component when it comes to options trading, because you need to know certain things, and I'll give you examples that we'll go over. Yeah, Witchblade, it might be your connection. Looks like nobody else is having issues. So the option Greeks, you guys might have seen like delta, gamma, theta, vega, implied volatility, X, Y, and Z, and you're like, what the heck is this? And you always hear people talk about, like, what is this? What does it mean? How can I use it? How can I understand it? So on and so forth. So when it comes to the delta is essentially how much value is going to be added to the option contract, like the price, the premium. So when you hear the word premium, that's the price that you pay for the contract. So 3.00 or 3.10, whatever it is that you pay for the contract, that's the premium of the contract. So the delta, when we see 0.57, it adds 0.57 or $57 to the premium of the option contract. So if I get in at $3, actually, before I go into that, so the delta, like I mentioned, when the stock price goes up $1 in our favor or against us, it's going to add the value of the delta to our contract. Meaning, and I'll go over an example in a bit, but just for now, if let's say Apple is at 155 and it goes to 156, $57 approximately is going to be added to the price that we got in. So if we get in at 3.00 and then it goes up $1 in our favor after we get into the contract, approximately we're going to gain at least $57 per contract. And the same on the opposite side, if it goes against us by $1, we're going to lose $57 approximately per contract that we trade. Cool. So the next part, gamma, the gamma is essentially just how much gets added to the delta as the stock price goes for us or against us. So we have here the delta, let's just round up to 58, right? And the gamma, let's just round up to 6. So if the stock price goes $1 after our entry, $6 is going to be added to the delta, which is also going to give us more money as or more value as our as the stock price goes in our favor more. So in this case, if the stock price goes up $1, instead of us getting $58 for the contract, like added to it, the gamma is going to add to this. So then we'll be getting $64 instead of 58. Cool. Glad that's making sense, Reacher. Now for the theta, I see this a lot when people are like, "Hey, I don't know what happened, but my contract lost value, but I'm in the money, or I'm close to the money, or whatever, or the stock price is above from when I got in." It can be different variables, but it might be theta depending how you're holding the contract. So theta, pretty straightforward. If nothing happens, if nothing happens in the stock price, this is the amount that the contract loses value every day that you hold the contract. So in this case, for this contract here, we're going to be losing $19 every day that we hold it. Something to keep in mind, the closer you get till expiration date, the higher theta is. For example, let's go really quickly back to Thinkorswim. So we have here for SPY, let's look at the 565 contract. The theta is 32, which is pretty much the entire value of that contract. Now let's go to 5 days from now, the August 30th contract, the same strike, 565. That theta is 42. Granted, the contract is more expensive. The contract is more expensive here at about 264. So every day that you hold this contract is going to lose $42 of value. So you just move the decimal to place the right. Yeah, like Cameron mentioned, when we're buying a contract, it gives us the right to buy or sell 100 shares of whatever it is that we're trading. So anything that you see in the delta, just multiply it by 100. If it's 57 cents, that's $57. If it's $3 here, that's $300. So keep that in mind. This is not $3 that you're paying for the contract. This is $300, but the premium is 3. Thanks for mentioning that, Cameron. Cool. And then the Vega. So the Vega is the amount that our contract is going to increase or decrease based on the IV. So for every percent of IV that the contract increases or decreases, the Vega is going to be added to it. So let's say here as an example, we have the IV or implied volatility of 30. Let's just round down to 30 to keep math simple, and let's round down to 8. If this goes up to 40, that's going to be 10%. This is going to be 10 times 8. So we'll get $80 added to our contract just by IV or implied volatility. Gamma increases the deeper in the money the contract is also, right? Yeah, so gamma increases the more in the money the contract is. So showing you a live example here, the gamma is this right over here. So we have these in the money contracts where the gamma is higher as it's closer and in the money. For whatever reason, it's like once the delta caps off at 1.00, that's like the maximum the delta can ever be, 1.00. So the gamma is going to continually increase until this hits 1.00. So as we can see here, the money ones are 0.12, and in the money 0.12, 0.11, so on and so forth. So as it gets closer in the money, this is going to increase, but also decrease as it gets very, very close to 1.00. Because after it hits 1.00, the gammas is at zero because it can't add any more to the delta. So the delta will always be maximum 1.00. Let me know if that answered your question, Timothy. Cool. So just like I mentioned, in this case, if the delta goes up or if the stock price goes from 100 to 101, it's going to increase our contract by $57. So instead of it being 3.00, it'll be 3.57 approximately if the stock price goes up $1, and vice versa if it goes against us by $1. So let's look at Nvidia, for example, because I want to quickly talk about. Actually, before I go into that, any questions so far on the option Greeks that we just went over, or is everything clear before I continue? So would it be a good idea to take delta into account when entering a trade where the trigger candle would result in a larger stop loss than usual? Um, I would say yes and no. Yes, in the sense that if it's not in your risk tolerance, so let's look at Nvidia. Let's say if $50 loss per contract is too much for you, like your risk tolerance, what you can do is you can just get a contract that might be maybe two strikes away or maybe one strike away if you want to. At least that's what I would do. Or you can just reduce your position size. So if I usually use 5 contracts, but a delta of 54, let's say my stop loss is $1 against me and I use 5 contracts, that'll be a $250 loss if it goes against me, if my stop loss is $1 from my entry. If 250 is too much for me, then you can just, if like your stop loss is actually $2 on the strike price, just reduce your size. Instead of using 5 contracts, you may only want to use 2. That way, if it does go against you, you're taking a similar loss value-wise at $200 and change with 2 contracts as opposed to 5. So you can still stay within your risk tolerance in that sense if you want to get at the money contracts, which is what I do. Cool. So any questions on the option Greeks before I continue into IV and the IV crush that I think is going to be important for some people this week when trading NVIDIA? All right. I guess I'm a good teacher. I say that extremely humbly. All right, let's go to IV crush and IV. So, IV crush, definitely good to know if you are going to be trading earnings, which I personally am not an advocate for. I don't trade earnings. To me, earnings is just gambling because earnings could be great and then the price can go down, and vice versa. So as we can see here, because Nvidia has earnings this week, the IV is juiced 117%. That's freaking crazy. Usually the IV is like, from what I've seen, I think like 30 to 40, 30 to 45%, something like that. I gotta check some old screenshots. But 118%, that's a lot. So if we look at these contracts, the Vega is $6 and the IV is 118. So let's just say that NVIDIA's average IV is $30. Let's say $40 to just give it some room, right? So we have 118 IV. Let's say the average is 40. So we have an increase of 78%. And then the Vega is $6. So this contract right here, this was in the money. This in the money contract has $468 worth of like value just off the IV. So what I see that happen to people and happen to me is that when they trade earnings, even if the contract goes in the money or is like $1 away from hitting the strike price, you're gonna lose a lot of value in your contract. So people be like, "Hey, what happened?" The contracts are in the money, or they're like right there to like being in hitting my target of the strike price, but I still lost a lot of money. It's because of IV, because after earnings is released, people don't really care anymore for the earnings release and the big fluctuation of the price if it's going to go down or up. So that's when IV crush happens, and the IV goes back to its normal levels more or less. So from 118, it might go back to 40 or 50, meaning it's going to lose $468 more or less in the calculations that I just gave on the contract, just based off the IV. So be mindful of that if you are going to trade earnings. Let me know if that made sense over the IV crush and understanding why it increases and decreases and things like that. And when the VIX is like really high and pumping, IV increases as well for everything. I've heard the Greeks are constantly changing with stock changes in the stock price. If that's the case, is it important that we take them into consideration when day trading? Absolutely. You always take the Greeks into consideration. They are always changing, but not to an extremely drastic amount. So Greeks, always important to take into consideration, whether you're swing trading or day trading. Can you make money off of IV crush? Yeah, you definitely can. And I'll give you an example, which I don't recommend or do at all. All right, let's bring up a chart up so we can mock up an example. So I'll give the example because I would rather people know and be informed before they make a silly decision. And I like everybody to be on the same page, because the more information we have, the better informed we can be, and the better you can be educated to not make mistakes that can be very costly. Yeah, for educational purposes, as Cameron mentions. So I'm not going to put all the Greeks here. I'm just going to keep it simple. So let's say NVIDIA, what are we at? Let's say NVIDIA, let's do 140 strike. 140 strike, NVIDIA call. I can't spell today, apparently. And then, what the heck? It's not what I want. All right, so NVIDIA strike, the expiration date is this Friday, which is the 30th. All right, that's August 30th, 2024. Let's say our entry or our contract price is, let's say 1.00. Actually, no, let's say it's like 700. And let's say IV is 100%. And let's say Vega is 0.05, because I want to make math simple. So, like I mentioned, if you get into this contract and the IV, let's say, goes to 50%, which would be $250. Yeah, 5 times 50, $250 that your contract's going to lose value, which will make it, what is that? 4.50. So after IV crush, So if you're buying the contract, this is bad for you because when the IV gets crushed, you're losing $250 on the contract. However, let's say, so let me just do this real quick. So profit loss negative 250. Now, this is call. So if you're long the call or if you bought the call, this is bad because you're down $250 because of IV crush. Now, if you're selling or you're writing the call, so let's say you're shorting the short call, you receive the $700 up front. And whatever the difference is when you close the position, so when you buy the contract back to close, so when you're buying, you're buying to open, and when you're selling it, you're selling to close. Now, when you're shorting something, you're selling to open and then buying to close. Little tidbit there. So if I'm short the call, my profit loss is actually going to be positive $250 because I received the $700 in premium and now it's valued at 4.50. So if I buy the contract back, I profit $250 on that trade. And if the contract goes to zero, then I collect the full $700. Now, the reason why I mentioned this is because, like, why I don't really advise things like this, or I don't advise at all, but why I don't really, um, I would just say that I wouldn't do it because remember, if you're long a call, the most I can lose is what I put into that contract, which in this case is $700. If I'm short the contract or short a stock, my losses are unlimited. So if this goes from 7.00 to let's say 21.00 or 700 to $2,100 and I'm short, I'm down $1,400. And it can keep on going up. So keep that in mind. The losses are unlimited because the stock can keep on going up. So keep that in mind. So stay away from IV. Not necessarily. Some things that I like to do sometimes is if I see a good swing setup and let's say earnings is in a week or 2 weeks, I'll take that swing trade and get a contract like a month out because if it's going in my favor, not only am I going to get more value added to the contract because that price is going in my favor, I'm also getting my contract increased in value because IV is also increasing as it gets closer to the earnings. So whoever had this contract here, the 130 strike on NVIDIA, let's say 3 weeks ago, and they only paid, let's say, $300 for it, they have about $300 to $400 added in value just from the IV, just from the IV. So IV isn't something that you should avoid. If you know how to use it in your favor, then hey, do what you got to do. Any questions that you guys have on anything on what I've gone over so far? And there's no stupid questions. There's no judgment here. Any question that you want to ask regarding the topic in class today, please type it in the chat. Remember, there's no stupid question in this business. That question that you think might be stupid might be like the light bulb that goes off in somebody's head when it gets answered. So any questions at all, put in the chat regarding today's class. Where is the best place to get into trade in or out of the money? Uh, Dennis, are you asking like when is the best time to get into a trade? Hey, thanks, BT. I appreciate that. So you always trade at the money? Kev, so generally, like if I'm gonna trade IWM, I usually trade like at the money or even in the money contracts because it's cheap for one DTE. If I'm gonna trade, let's say for Nvidia, I usually do like at the money, like two strike prices away. So if my entry is at 128, then my strike is probably gonna be 130. If it's Friday or Thursday, I'll probably do like a contract that's $1 away or even in the money because it's cheaper. So in the beginning of the week, I'll probably choose contracts that are $2 away from my entry. And then later on in the week after, like Wednesday, I'll do a strike price that's like $1 away or even in the money because they're cheaper now. So in the beginning, first half of the week, Monday, Tuesday, for NVIDIA specifically anyway, two strikes away. If it's like Wednesday to Friday, I'll do like one strike away or in the money. Oh, cool. Excellent, Dennis. And Dennis, I'm not sure if you're in my group or any of the other groups that I support. You can also look at the watch list that I post. So, my levels that are here, whatever levels are here is the exact same thing that I'm going to be looking at. So, let's say for Tesla, I'm not trading Nvidia until after earnings because the IV is too high and I don't want to pay that much for a contract. So yeah, if you're in any of the groups that I support, just look at the watch list that I post, and these are the levels that I'll be looking to take. So I'll probably be looking at IWM tomorrow and probably Tesla. I'll see which one hopefully doesn't gap up or down, and then look to take that one. But definitely looking at IWM. I like that Momo hammer that we have there. What does long above or short below means? So long just means if you're going long the position. So if QQQ breaks above this price, you can, if you trade shares, you can go long, you can buy shares, or if you trade options, you can buy calls above that level. If you don't know, actually, let me ask you, Reacher, are you in my group or are you in another group that I support? 100K? Yeah, so what you want to do is in 100K's group, go to, if you're from, I would imagine if you've been here for a while, you're familiar with the strat. So, look at the material that 100K has over the strat where he goes over it. Um, if it gaps up or down from my watch list levels, look for TTOs. Keep it simple. Look for TTOs in the 5 or 15-minute time frame. So if you're also in my YouTube channel, if you go to the strat playlist, the strat will tell you about the strategy that the watch list is explained or is made based out of. And if you missed that entry off the watch list, you can look for a TTO, which I explained in this video here. So check that out. Cool. Gotcha. All right, let's see. So yeah, if for those who may not know the term like long or short, that just means you can buy the stock or short the stock, or rather buy the stock or buy calls, or you can short the stock or buy puts, whichever one it is that you trade. Let's see, other questions. Don't a lot of those contracts get cheaper during the end of the week? Yeah, Kev, that's what I was mentioning. Like for some contracts, let's say for NVIDIA, they'll get cheaper as the days continue closer to expiration because the theta is reducing the value. Cool. All right. We got questions for another 10 minutes and then we'll wrap up. And for those who are not in my group or any of the groups that I support, you do also have the option of becoming a member of the YouTube channel for the watch list that I will provide to you daily. Is $10 a month. If you are already in my group or a group that I support, don't worry about it because I'm gonna post it in there. But if you are not in any of those groups, you'd also have the option to become a member of the YouTube channel, like I just mentioned. $10 a month, it give you access to my watch list every day. Any other questions, put it in the chat. Also, completely forgot to mention, I always do this where I forget to place like notes on my desk for things that I want to talk about. Anyway, moving on. For those who are watching this or maybe watching the replay, I, of course, as always, appreciate you guys for supporting the channel and coming to these classes and allowing me to teach you guys and help you learn, which I love doing. If anybody is looking to get into options in a more detailed manner, you are welcome to, where is this? I'm going to post this link in the chat in a bit, but this has the link to my options course, which I'll post in the chat now. And for this specific class, I created a code, which I think it's Greeks. Yeah, I think the code is Greeks. There we go. Yeah, so this code will give you $50 off of the options course. So if you want to go into more detail over options and exactly how I trade it and other components that we didn't go over today, you're more than welcome to access the contract there. We'll go over stop losses, so you can have proper risk management when you are trading them, X, Y, and Z. This is limited to the first 10 people. So that code will only work 10 times. Do you have a live trading group? So Dennis, in the link that I posted, that's also a link to my group. For those who decide to get the options course, it'll give you lifetime access to my group. So it's included. So don't get them separate. If you get the options course, you also get into my group for free. In my group, I don't live trade. I live traded, I think like 3 weeks ago for a few days straight, but I get really distracted when I live trade. So I don't do it often. Every now and then I will, but it's very, very rare. Maybe like once a month or once every 2 months, if that. So it's pretty rare that I have the in the past. It's very rare that I live trade because, like I mentioned, it's distracting to me because people are usually asking me a lot of questions in the chat, and I'm like trying to focus and then like read the answers and then or read the questions and answer the questions, and then I love to talk, as you guys can see. So, you know, all to say I get distracted very easily, so I don't live trade as much as I would personally want to. Hey, thanks you, Kev. I appreciate that. Yeah, Kev, well, Louis V in the chat, he got the course too. It's helped him a lot. So definitely appreciate that, Kev. In your past life, you must have been a teacher or professor because you spitting and it makes making sense, bro. I'm gonna screenshot that and add it to my motivation folder. Hold on. Thank you for that, Timothy. I appreciate that. All right. I'm adding that to my folder later when we're done here. You know what's funny? When I was younger, my friends would always say like, you should be a teacher or you should do, be in some type of teaching role. You're really good at it and you have the voice for it. I guess I have the voice for teaching and I'm clear. So, or not, I guess, from what I've heard, I have that. So what you just said, Timothy, pretty much gives more power to that. So cheers. Thank you. With your watch list, will you trade or enter a trade if a shorter time frame of a strat will trigger or a higher time frame? Wait, if a lower time frame of the strat will trigger a higher time frame. Great question, BT. So generally the reason why, let's go to SPY real quick. Actually, let's go to SPY here. Or maybe NVIDIA will be better. Actually, no, because I think that'll be the same levels for the 4 hour. The 1 hour might have the same levels too. Hmm. Uh, so the reason why personally I like to just take the 4 hour, because you can get in, let's say on the 1 hour earlier than my 4 hour trigger or a short trigger. To me, it's just a little more risky because if the 1 hour triggers, the 4 hour and the daily are still trading inside bar, meaning that if I might be susceptible to chop until the 4 or the daily trigger. So yes, can you use a lower time frame to get in earlier than the 4 hour trigger? Absolutely. I just prefer higher probability trades, so that's why I like to use the 4 hour as my initial entry if it doesn't gap up or down. So if you haven't used the lower time frames besides the levels that I post, you can back test it yourself and see how viable it is and see if that works for you. I just personally don't do it that way. All right, 2 minutes left. As we wrap up, what was everybody's biggest takeaway, or what was the biggest thing that you guys learned today? Type it in the chat. Your biggest takeaway or the biggest thing that you learned today? Learned everything about the Greeks. All these days I had mental confusions about Greeks. Not anymore after this class. Thank you. And I appreciate you doing this. Hey, Balaji, my pleasure. You know, it took me a long time to like understand the Greeks too. And when it comes to like teaching people or like sharing what I know about the stock or like, you know, trading and stocks and X, Y, and Z, I like things to be clear and concise and easy to understand. So, you know, I do my best to do that for you guys as well, because you'll see people who have these courses or classes and it's like a bunch of jargon that they add that's, in my opinion, unnecessary. Or maybe let me not say unnecessary. Just the way I learn, I find the way I present it easier to understand and simpler to understand. So I appreciate that. Glad it was clear for you guys and that, you know, this helped make it make more sense for you. Yep, definitely IV. That took me a while too, because I traded earnings a long time ago and I was like, what the heck is going on? Why is my contract worth absolutely nothing when it went in my favor? And good old IV crush. Yeah, definitely how the Greeks add and take away um, value based on the movement of the stock. Super, super important. Sweet. All right. Any last things? I'll wrap up in another minute. Remember, if you would like to get my options course for more input on how to apply everything to the strategy and other things that I have in there, you can read the details in the link that I posted. What's my handle on Discord? So my username on Discord is advent underscore. So this is my username on Discord. Advent underscore. And I'll bring it up here too. So advent underscore. Also, I want to mention this. I will never reach out to you first on Discord. I always wait until people respond to me. If I reach out to you and whoever reaches out to you posing as me is like, hey, how's your trading going? Probably a scammer. So please pay attention to who messages you if it's not me. Remember, I'm not going to message you first. People message me first and then I respond. Also, be sure to look at the details. I've been a Discord member for the last 8 years. If you see somebody that it has, because it'll look just like this. It'll have my same icon. It'll have the same name. The username will be different. They might add like a period or something to like throw you off that you might not catch right away. It'll have the same bio, the same background usually, but you always pay attention to the member since and if we have any groups in common. So keep that in mind. I created this Discord account 8 years ago. So if it's a date that is not this, that is not me, and I'm not messaging you. Because I had some people who messaged me like, hey, is this you? I'm like, no, that doesn't even sound like me. I don't even talk like that. Here's a funny story for you guys, and then I'll let you guys go and enjoy your weekend. Why do you call yourself Advent, and where did the YouTube name come from? Just curious. Ooh, I love these questions. So Advent to me, it just sounds cool, but also, before I started teaching and trading and teaching people and stuff like that, I was a musician. Well, I still am a musician, and my band's name was Advent. So that's where I got the name from. I never really changed it on the internet because, when I started trading stocks and teaching people already knew me as Advent. So I'm like, all right, I'm just going to leave it at that because I don't really care to change it. And then the name for Cerulean Mind Academy is like on the business side of like my coaching, right? So I couldn't think of anything clever for like Advent school, or like, to me, that just sounds corny and goofy, right? So I'm like, all right. I used to watch a lot of Randy Howell videos, and he always says like creating the trader's mind, right? And the trader's mind, disciplined, has his rules, follows his plan, so on and so forth, right? And then I kind of took a spin on that because my group is called Cerulean Trading Group. So I had that first before I made Cerulean Mind Academy. So I'm like, all right, I love Randy Howell, and he helped me a lot when I worked with him. And he was one of my trader psychology mentors. Great guy. Look up his video. He has a bunch of good videos to look at for trading psychology. So I'm like, all right, my main goal for teaching in the realm of trading is for the psychology of trading, because a lot of these, well, again, from what I've seen, a lot of courses and mentors that I've had, at least my earlier mentors, they never necessarily taught me about the psychology of trading. It's more so like strategy and technicals and things like that. But for me, I wanted to do something different because I'm like, all right, everybody's teaching strategy and technicals, but nobody's really teaching psychology and mindset. So let me focus on that. So because of all that, I came up with the name, Cerulean Mind Academy, right? Because I'm here to teach you more about, the mindset and the psychology and all of that stuff that goes into trading, because that's to me one of the most important parts when it comes to trading. Because I can teach you exactly how I trade step by step. But if you don't have the discipline or the risk management and other things to properly trade the strategy, then you're going to fail. So, all that to say, that's where the name came from. I like that you so plainly explained the Greeks and how the max will be 1.00 for delta. Makes a lot more sense looking at the option prices now. Sweet. Glad that helped, Isaiah. Excellent. All right, ladies and gents, we are 6 minutes over. I appreciate you guys for coming out. Remember, any questions you guys have, you're more than welcome to send me a message on Discord or just tag me. If you tag me in a group and I don't respond in like 2 to 3 hours, I probably didn't see it. So you can just message me like in a DM and I'll respond back to you as soon as I see it. Because those, alerts get drowned out in some of the other groups because so many alerts are getting pinged to me. So all in all, appreciate you guys for coming out and attending and asking your questions. Keep me updated on how the next 2-3 weeks help you guys, and how your trading improves. Put it in the comment of this video in a week or two, or if you know me on Discord, just message me there on Reddit or whatever you know me at. Anyway, before I go off on another tangent, thank you guys again for coming out, and I will see you guys on the internet. Have a good night, y'all.